Short exercise 3-15. We're going to use the worksheet to create the adjusted trial balance. So we can't see the adjusted trial balance columns yet because we need to do the adjustments first. So at the end of the accounting period, before they enter the adjusting entries into the journal, the accountants use a spreadsheet to summarize all their adjustments in the spreadsheet first, and then once they get done with the worksheet, and then once they're done with the spreadsheet, they will enter the adjustments into the journal. So on the far left column, we have the unadjusted trial balance, and a lot of students, when we get to the project, forget where these numbers come from. These balances, like the cash, $300, office supplies, $900, those come from the ledger and represent our account balances before the adjustments are done. So the instructions say, Just Right Hairstylist has begun the preparation of its worksheet as follows. So they got an image of the worksheet here. Notice we can see the adjusted trial balance columns over here, but we don't need that because they also have the same data here. It says year-end data include the following. So here's our adjustment data. Office supplies on hand are $300, depreciation is $700, accrued interest expense is $800. So it says complete Just Right's worksheet through the adjusted trial balance section. In the adjustment section, mark each adjustment by letter. So we're doing adjustment A, office supplies on hand. So what this means is on hand means that's the amount of supplies you have currently. So what has happened is you send the intern to the office supply closet and you have the intern count the office supplies. And the intern comes back to you and says, we got $300 of office supplies on hand, meaning we have $300 left. How much did we have according to our accounting records? We had $900. So our current balance is actually $300, but it was $900. So how much did we use? So in other words, this balance, $900 balance, should be $300. So how do we adjust this account to go from $900 to the amount on hand, the $300? We have to lower this office supplies account by $600. And how do we lower an asset? We lower an asset with a credit. So this $600 represents the amount of office supplies we have used. We had $900 according to our books. We go and count the office supplies in the closet. We only have $300, therefore we must have used $600. We have to lower the account. So now we need well, first of all, I need to put an A here because this is transaction A. The reason we put the letters here and here, so if we ever come back to this spreadsheet in the future and we've forgotten what we've done, these letters help us match up the data to this information here. So now we need a matching debit. So what account shows that we've used up office supplies? It's supplies expense. A lot of companies will call this office supplies expense, but they chose to call it supplies expense. So I've got an A, I've got a debit, and I have a credit. So we're done with adjustment A. Now let's do adjustment B. So somebody has already calculated the depreciation for us, so we don't have to go through the straight line formula. But we do know that the result is we have $700 of depreciation for this time period. So now we just need to record the adjusting entry. So we need a debit. So what's the debit account for depreciation? It's depreciation expense. How does an expense increase? It increases with a debit. So I'm going to put $700 here. This is transaction B. And now we need a matching $700 credit. And remember, whenever we record depreciation, the other account is accumulated depreciation. And which way does accumulated depreciation go? Well, it tells you in the name of the account. It accumulates, it goes up. And what type of account is accumulated depreciation? It's a contra asset. And how do they go up? Well, their plus sign is the opposite of the asset. So it increases on the credit side. So for the credit for accumulated depreciation, I'm putting $700, adjustment B. And then finally, we have accrued interest expense. Accrued, like I've said so many times before, means something is accumulated but is not yet paid. And that something that is accumulated is interest. So we owe some interest. And the reason we know it's owed is because accrued tells you it's owed in this case, because accrued means something's accumulated but not yet paid. So we can't involve cash because it has not been paid yet. So we need to increase interest expense by $800. Adjustment C. And because it's not been paid, we owe it. So what is the liability that shows that we owe interest? Interest payable. So I need to increase that with $800. Adjustment C. Now if you have trouble telling what row you're on, you can, what I like to do is I like to move this and use it as kind of to block off. So now I see that I'm on the correct row. So we've entered in all the adjusting entries. So now I just need to add up 600 plus 700, that's 1,300, plus 800, so that's $2,100 of debits. And we have the same amount for credits. Wow, that took a long time. Excellent. So I can close this window. I don't need it anymore. And now the only thing we have left to do is to fill in our adjusted trial balance. Actually, I should have kept that window open. But you can use this window to block things off too. Or I'm going to open up this window. And I'm just going to, of course, you don't have to do this. This just helps me make sure I get things in the correct line. So what we're going to do is update the adjusted trial balance, which means we're going to take the unadjusted trial balance, either increase or decrease it based on the adjustment, and then put the new balance. Obviously, there is no adjustment, so we still have only $300 of cash. So office supplies, we had 900. By crediting it, remember this is the amount of office supplies we use, 600. By crediting it, we're lowering the account. So the new balance is 300. And notice it tells you that here too. Office supplies on hand, 300. Go down to equipment. I can just copy and paste. It's not adjusted. Accumulated depreciation, we had 700. We increased it 700 more, so that's 1,400. We had $500 of accounts payable. It was not adjusted. We still have 500. Now the most common error in this problem is putting the balance on the wrong side. So be careful. And I might even make the mistake because I do it all the time. We had nothing. We increased interest payable by 800, so our new balance is 800. Note payable does not get adjusted, so it's still 2,800. Capital does not get adjusted. Revenue was not adjusted. Rent expense, now notice this is a debit, so I'll put it on the debit side. Supplies expense, we had 0. We increased it by 600, so notice this is a debit, so I'm going to put it on the debit side. Remember, all expenses should have a debit balance. Depreciation expense is 700. Interest expense, we had 700. We increased it by 800, so we now have 1,500. Close that. Now double check that our balances are on the correct side. Assets should have a balance on the debit side. Contra asset, accumulated depreciation, should have a credit balance. Same with liabilities. Got 3 liabilities. Capital and revenue also have a credit balance. And if you forgot what side the balances should be on, look at your accounting equation over here. Which side is the normal balance side? It's always the plus side. And then our expenses always have a balance on the left side. So everything looks good. So now we're going to add up all these debits and we get 27,200. And then we add up all the credits, and you hope and pray that you got the same amount. And we do. So the next step for the accountant in the real world would be to take these adjustments in the adjustments column and actually put them in the journal. Now remember, this is just a worksheet. This is just a spreadsheet. Just because we put information here does not mean it's in the journal. This is just to help us update the account balances. So like I said, in the real world, the next step would be to enter these into the journal. And that's it.